All right, let's find out a little bit more in detail about what's going on in the housing markets. We have Nicolas Retsinas, a senior lecturer in real estate at Harvard University. He joins us now. Professor Retsinas, can you explain what came out of the S&P Case-Shiller results that were surprising? Because the decline is for November, but is that something that we should be concerned about?
Well, the Case-Shiller data showed that housing prices were falling pretty much across the nation. After what appeared to be an uptick earlier this year, prices seemed to be trailing off. I think somewhat of a surprise that it was national, but if you put it in the larger context, I suspect that the price increases we saw earlier this year was somewhat artificial.
All right, well, let's listen into Case and find out exactly how he interpreted the results.
If you look back, the bottom tier has been unbelievably volatile. Housing prices tripled at the bottom end on the way up, and they've given almost all of that back at the lower end. So a lot of volatility is out of the lower end.
Karl Case talking about today's S&P Case-Shiller data. Professor Retsinas, when you look at the different markets, not geographically but by price, are you seeing greater pressure at the bottom end of the market? Will there be more real estate coming on, flooding that area?
Yeah, I think the bottom end of the market is in direct sort of competition and fighting with the continuing heavy stream of foreclosures. With foreclosures dominating that point in that price point in the market, it continues to have a depressing effect on prices. And indeed, until we get those foreclosures through the pipe, we're going to have continued downward pressure on prices at the low end.
Will this affect bank earnings more than any analysts had previously expected? Because they seem to have put the housing issue behind them. At least that's what they want investors to believe.
Well, to some extent, most of the lending, as we know today, is really financed by the government, by the GSEs, by FHA. They're taking the risk in terms of financing and home purchases. Old loans are kept on the balance sheet, but new loans going forward have been passed on to the government.
Do you see the report from Freddie Mac and Fannie Mae detailing any resolution to the issue of government support for housing?
Not resolution, but I think it'll be a beginning of a debate. Even the new leadership in the Congress has said, given how fragile the housing market is, how vulnerable, witness today's data, no one's calling for precipitous action. So I think it'll be the beginning of a debate, but it could be a lengthy debate.
Do you believe that government support in the form of tax credits, is that going to be revived in 2011 for the housing industry?
I don't think so. The tax credits earlier this year, in some ways, were very successful. So successful, I think they artificially increased prices at the beginning of this year. I don't think there's much of an appetite on the Congress, and I'm not even sure in the housing industry for renewal of the tax credits.
Would you be buying a house now if you were looking for one? Is this the right time to actually make a purchase?
It is a good time. Your purchasing power is enhanced by very, very low mortgage rates. I would condition it on, I'd want to make sure that if I bought a house, I intended to stay there for a pretty good period of time. If I bought it for investment purposes, I think it's still a little risky.
Do you think that prices will overshoot on the downside just as much as they overshot on the upside?
Well, they've already gone down pretty dramatically over the last sort of 3 or 4 years. You know, we're close to a 30% price drop. I suspect at this point we're going to be staggering and some stumbling and some months sagging in terms of home prices. But as I look at some modest uptick in the economy, I look at continuing low mortgage rates. The data on consumer confidence, I think, is generally helpful. So I think we'll be looking for stabilized house prices, but not necessarily increasing house prices.
Professor Retsinas, we saw in today's data areas such as Dallas and Atlanta and even some cities in the Midwest, they're starting to see further price declines. Is that of great concern?
It is a concern because, again, as I said before, the data is national. There really is almost no metropolitan area, with some rare exceptions, that hasn't seen continuous prices fall. And again, I don't want to point a finger at a single culprit, but I look at these foreclosures, and as long as they dominate the market in many of these metropolitan areas, they're going to put downward pressure on prices.
So what is going to resolve the foreclosure issue? Is it going to be a legal battle?
Well, we already have litigation sort of going through the process now. So part of it is getting that litigation behind us. And part of it is just a natural process of you start the foreclosure process, you've got to get to the other end of the pipe. So part of it we'll work through as we work off these loans. And if we can solve the legal issues, we should be through most of the foreclosure process problems by the end of 2011.
Now, having said that, many people might be in their homes but are going to be underwater in terms of the amount of equity that they hold. How will that affect their future outlook and their ability to participate in the economy?
Well, that's going to certainly slow down their participation in the market. There are many people underwater with their mortgage, and those people are going to have a difficult time and are really not going to be looking to buy new homes or bigger homes or better homes, because to do so they'd have to pay off their existing mortgage. So to the extent they continue to pay their mortgage, they're more likely to be tethered to their home. But it is a cause for concern in terms of future foreclosures and future defaults.
Does this mean, obviously, that they cannot take advantage of low interest rates and refinance?
It makes it very, very difficult because refinancing is predicated on having an appropriate loan to value. Buying a new home is making sure you've paid off whatever outstanding debt you have in your existing home. So they're, in many cases, are going to be shut out from taking advantage of these historically low financing rates.
All right, I want to thank you very much, Professor Nicolas Retsinas, coming to us from the Kennedy School at Harvard University, senior lecturer in real estate.